Good morning, and welcome to episode 67 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, March 16th, 2022. Today, all eyes are on the U.S. Federal Reserve. Chairman Jerome Powell and the Federal Reserve are meeting in the Federal Open Market Committee meeting for March. This two-day event began yesterday. They're weighing the prospects of the current crisis in Europe, along with the current state of the economy. They want to fight inflation, but they're worried about triggering a recession. All these things are running through their minds as they're backed into a corner trying to deal with the mess that, as you know, I've said over and over again, they created in the first place over the past several years, past several decades. So we'll see where that goes here today. Most market participants are expecting a 0.25% interest rate increase. I'll be looking specifically to see that they have completed asset purchases and what is the plan to divest their balance sheet of those asset purchases going forward. As a result of the Fed's talk here and the crisis in the Ukraine with on-again, off-again peace talks that show progress, don't show progress, etc. Everybody's hopeful this will come to an end soon. There's all sorts of volatility. Volatility is your watchword in the marketplace. It is affecting all markets across the globe. Metals, over the past 2 weeks, a week ago they ran up to just shy of all-time highs, below $20.75 an ounce for gold, and the other metals followed. Over the past week, they pulled back again. In most cases, people attribute that to two things. One, the potential for peace in Europe, and two, in advance of the interest rate increases coming from the Federal Open Market Committee. Let's take a look at the metals prices over the past 2 weeks. Today, gold is at $1921.80 an ounce. That's down 1% from $1939.80. Silver is down 2% to $24.82 an ounce from $25.32 a couple weeks ago. Platinum is down 4.5% to $1,019 an ounce from $1,067. And palladium is down 5.5% to $25.34 an ounce from $2,682 a couple weeks ago. The gold-silver ratio has ticked up slightly, with silver falling further than gold. It's now at 77.70 versus 76.88 2 weeks ago. And the U.S. dollar continues to show strength, largely because it and gold are a safe haven beneficiary in times of geopolitical crisis. It's currently at 98.62, up from 97.39 a couple weeks ago. Folks, listen, no matter what the Fed does today, if they do a quarter point, 50 basis points, whatever the case might be, this is so little that it will have zero impact on what is now year-on-year 7.9, almost 8% consumer inflation. Okay, they have to get up to 10%. That's 1,000 basis points, not 50, if they're going to make any dent in this inflationary monster. So, with the markets pulling back in anticipation of a quarter-point rate cut, all that is a gift to you to buy gold, silver, platinum, and palladium cheaper than you probably ought to be able to do. So go ahead and take advantage of it. As always, go ahead and subscribe and like us here on the YouTube channel. Please follow all our social media at Asset Strategies. Subscribe to our bi-weekly alerts, always something interesting, and our monthly newsletter information line. And please, don't ever forget that getting rich starts with keeping what's yours.